So, welcome everyone. My name is Jack Wang. I am CEO of Longhorn Financial based in Westford, Massachusetts. I'm an independent financial professional. I specialize in advanced college financial aid planning and retirement planning. But part of my webinar Wednesday series is to share useful information with uh, everyone, anyone and everyone. So, today it is my honor to have my special friend, Paul Falowitz. He and I give a lot of crap back and forth to each other, but I won't hold these things against him. Paul works for Cicentrix Business Advisors. He's based in Billerica. He worked in the corporate world for over 20 years, starting as a junior accountant and working his way to a CFO position for a freight company. In 2018, he decided to start his own business and taken his knowledge and turned his attention to small business owners, helps them understand their financials by becoming their virtual CFO. And he is also a trusted advisor for his clients and aids them with all facets of the business, not just the financials. Additionally, he is also an enrolled agent, and so he's able to help his clients with tax preparation. As I mentioned, he is from Billerica. He lives there with his wife, Gail, and two grown kids, Hannah and Michael. So, Paul, great to see you. Great to have you on.
Thanks for having me, Jack. I appreciate it.
So let's go ahead and get right into this. I'm really excited here. So again, we're going to be talking about small business finance and the payroll protection program loans. So let's just start off, right? Let's start off sort of generally, all right? So what are some of the, or what would you say is the biggest hurdle from a financial management standpoint for the average small business owner?
Most small businesses really struggle understanding their financials and kind of understanding their profitability, how much cash they have in the bank, and being able to make informed decisions with that information. A lot of, they don't understand their costs. So, for an example, they might be selling their product for $100, but they're not realizing that it actually costs them $200 to produce that, to pay their employees, to pay their rent, and to do all that stuff. And what they're doing at the end of the day is they're not realizing that they have no money in the bank and they're not generating the cash they need in order to buy the next, round of materials or services in order to produce their product at that point. So a lot of people just don't understand that. They get into business because they have a great idea, they have a great product, they have something that's going to help a lot of people. However, they just don't realize the financial side, which is usually what the downfall of a lot of small businesses end up being.
Right, right. And I think, we're going to get to sort of the pandemic and PPP loans in just a moment. But I think if you watch the news and you hear about the small businesses, what you say is totally true is, just because you're a great chef doesn't mean you know how to run a restaurant, right? As an example. And so the running of the business versus just providing the product or the service are completely different things. So to that end, then, right? So if you're in business, you're a small business owner, and you're offering whatever product or service in your financials. What would you say is the most important thing for a business to monitor? Right? I mean, there's all different numbers and metrics and things that people could look at, but what would you say would be the number one thing to really keep track of?
During my corporate career, whenever I was looking for a new job, and it's even true now with small businesses, my eye always goes to the cash. I'm always looking to see what that bank balance is, how much money they have. That ends up allowing the business owner to make a lot of informed decisions if they know what that number is. Because if they have the money, they can spend and they can invest and they can figure out what that next step's going to be. But a lot of small businesses are living kind of the paycheck to paycheck situation where they're waiting for a client to pay them before they're able to do the next thing. So I'm always looking at that cash number. It's, I think, the most important thing for a business owner to make sure that they have. And again, with that, you can do a lot of things with money. Without money, there's a lot of things you can't do. So, and I look at it from a simplicity standpoint too. If you want to hire people, you're going to need to pay them payroll. There's obviously a tax component that's with that. You need to make sure that they get hopefully yearly raises based on the way the company's moving. But without that money, you're not going to attract good people, which is then going to be reflected in your customer service and a lot of other things that go on with the business at that point. So for me, money, cash is king. It's been a phrase that's been out there forever. I never invented it, but it's something that I sort of preach to my clients and make sure that if they don't understand that or if they can't answer that question, of how much money's in the bank at the moment, then they're not running their business the proper way.
Right. And cash is king. I mean, and again, even among larger companies, if you really pay attention to business news, when the whole shutdown situation started, there were larger companies that were having liquidity squeezes because they didn't have a lot of cash on hand. But obviously, for smaller businesses, it's even more vital. So that makes total sense. So, so for someone who isn't necessarily in the finance field, right? So most small businesses, owners, I should say, they're really good at whatever their service or product is, right? Again, whether that's food or landscaping or whatever the case may be, they're not necessarily financial people. But of course, advertising out there and what people say is like, oh yeah, just get the software package. It's so easy to do your bookkeeping, or just do this, it's so easy, and just do that, it's so easy. Well, the reality is, I'm sure it is kind of easy, but to a non-financial person, it's not always that easy, right? So, as you work with business owners, is there one software package that truly is easier, or maybe geared a little bit more towards the non-financial person? The person who's actually busy doing their thing, right? Whatever their thing is, and not necessarily a bookkeeper.
Yeah, I mean, there's several different packages out there, from QuickBooks to Zero to a whole host of small little business ones. I have my preferences on certain ones, but I always tell someone that they have to have something. If they're not keeping track of it, if they have it in their head, that means it's probably not 100% true all the time because things change so quickly. But if you have it in some sort of form, you're keeping track of it, you understand it, you can actually show me, because that's always the question. Show me what your income statement is or what your balance sheet is. Those people that can't do that don't have that information. So some sort of financial reporting system is very important. And as we'll talk about later with the PPP stuff, there was a lot of businesses that couldn't give that information to the banks and the lenders, and their loans got delayed because of that. So it's very important to sort of have that organization ahead of time. It was important before the pandemic. It's definitely important during the pandemic as things are constantly changing here. So any sort of system is good. The system could be industry based. It could be a generic thing like a QuickBooks, but just having something is the most important thing for a business owner, so they can look at it, they can analyze it, and then again, they can make informed decisions. That's the biggest thing, is you want to make an informed decision. You just don't want to pull it out of the air and say, I'm going to do this because I feel like this is the best. Sometimes the gut reaction works, but most times facts are much better to make sure that you have that information in front of you to make that decision.
Right, right. So, it's interesting that you brought up the kind of that aspect with the PPP and having the numbers, because again, in the news, you hear businesses struggling to apply for PPP loans because they didn't necessarily have good financial information, right? That, they had sort of the proverbial shoebox full of receipts, let's say, but that was kind of about it. So, so that is really critical. So, as we sort of shift a little bit, we'll talk about PPP again in just a moment. But the other thing that really came out from the news through this whole shutdown was the importance of having a relationship with with a bank, preferably a local bank, I guess. Can you just talk a little bit about that? And furthermore, when you talk about sort of maintaining a relationship, is just having like a deposit account, like, oh yeah, my business checking account's at XYZ Bank, and that's sort of good enough? Or should businesses go beyond that, like maybe have your checking account, but maybe also have a small loan out or some other services I might use, right? So talk to us about the relationship with the bank and sort of ideally what it kind of should look like.
Yeah, I mean, most people go into a bank, and what people remember is getting that lollipop when they go into the bank, and someone in the corner that they wave to and say hi to, and not really having more than just the transaction at the teller window at that point. Having that relationship with the bank involves, knowing, some lenders in the branch, some other people who can help you when needed. So, you can have, $100,000 in a bank. It's earning a very low interest rate. You're getting something for it. Transactions are going in and out. But then when you need money, when things go bad, all of a sudden you need to ask for a loan, and they don't know anything about you. They've never seen financial statements. They have no idea what your company does, what you really bring to the table. So having that relationship, even in good times, is very important because you want to make sure that in bad times you're able to transition and get some sort of loan, whether it be just a simple credit line, just to cover the bills for a couple of days here and there. A larger loan if you're going to do a second or third location that you have to put a large deposit down on and get a lot of construction work done. You just want to make sure that the bank has a basic understanding. They don't need to know the kids' names, what the kids did last weekend, or anything like that, unless the banker does a really good job and does that. That's not really necessary. However, a good banker will do that and understand what's going on and will really understand your business so that they can go to bat with you to the underwriters and say, hey, this guy's business is doing, or this person's business is doing really well. Here's what they need now, but here's what they might need because it's seasonal. There's a roller coaster to a lot of different industries. So for 3 months I need it. For for the other 9 months out of the year I don't need that either loan or credit line or any sort of help with the business at that point. But you want the banker to understand what's going on so that they can aid you when you need it. And just you don't have to reintroduce them. It takes 3 months for the relationship to get going, and all of a sudden you don't need the money anymore, and then you start the roller coaster again. And 9 months down the road you start this all over again, and you just don't get what you need, and you struggle, and you have a lot of sleepless nights as a business owner. And you just want to have the relationship with the bank so that they understand what you're doing, and when you need it, it's there. And if you don't need it, just say hi to them anyways and check in and be a kind of a good citizen at that point, and keep up that relationship so for when you do need it.
So let's talk a little bit about that. You alluded to this a little bit. um, as a virtual CFO, I know you deal with a lot of businesses, and I'm sure that as you deal with a lot of businesses, you end up learning about their banking relationship, even though you might not be the one actually sort of managing it, right? So from a consumer perspective, right, we often look at, oh, we're going to go to this bank because they have the highest interest rate that they pay on the savings account, which of course right now is like 0.0001 everywhere. Or they have the lowest, home equity loan rate or something, right? And so that's really kind of how most consumers see it. But from a business perspective, uh, could you just share briefly your thoughts on what business owners should look for if they're picking a new bank, right? This is just your opinion, just sort of your experience, you know, but it's got to be just more than the rate, right?
Yeah, I mean the rate is one of the factors, but you need someone that you can trust, somebody who you can reach out to at any point in time, somebody who's going to give you the truth of what's going on and not just string you along, and then all of a sudden you get rejected at the end of the process, and kind of make you upset and angry and try to find the next one at that point. It's similar to anything else that you set up partnerships and relationships with people in the business world and out of the business world. You want someone that you can trust. You want someone that's going to help you out, and someone that has your interest. Again, the bank is, most banks are for-profit entities. They want to make money, which is why they give the loans out and charge interest. But you also want to make sure that they're looking out for you a little bit, and you understanding that, yeah, I'm giving them the money so that the person I've been dealing with stays at the bank. They get their salary paid. I can still get what I need from them when I need it, and it just makes things a lot easier with that relationship. So there is a gut feeling that goes into it. A lot of times, there's some people that want to physically go to a bank, so you're not going to drive a half hour to make a deposit to a bank. You want something that's a little bit closer to your office or your residence at that point. So there's a whole host of factors, but I think the biggest one is that trust and making sure that they work with business owners. There's a lot of banks that are more personal based, for individual people, and a lot of them that are very business focused as well. So you need to find ones that are going to help you and that you end up feeling comfortable with, so that in a time of need, when you need something, you're able to go in and ask them those questions and not feel embarrassed to say, hey, my business is struggling and I need a loan. It's, you feel embarrassed about it no matter what, but they're not going to make fun of you. They're going to work with you to try to get you through that time.
Right. Okay, that makes total sense. That's great. That's a great tip. So let's shift gears a little bit. Let's talk about PPP loans, payroll protection program loans. Um, so just kind of briefly, can you just talk about, I know that, that's been in the news a lot if you follow business news, especially. Just briefly talk about who's eligible to apply, and sort of more importantly, if a business didn't already apply, is there even any money left to apply for, as far as you know, right? So let's talk a little about eligibility, and is there anything left in the pot?
So basically, for the PPP loans, it started at the end of March. They signed the law or the act into law at that point. There was a lot of money available. The first round get used up within about 2 weeks. So later on, they signed the second law that gave more money, another 300 million dollars to all these companies to try to help them through lean times at the moment. The second round supposedly still has some money left. I've not seen any recent numbers, but there is still money left. You can apply through the end of this month, the end of June, in order to get that. Basically, any business is sort of eligible for it at this point. It was really set up for small businesses early on. There was a lot of large public companies who did apply for it. Going back to the discussion earlier about financial systems and having their numbers, obviously a public company has to produce their numbers every 3 months to their shareholders. So they had the information readily available, which made them top of the list to get things done quicker. Where a local, two-person company might not have had that stuff available. So it took them a little bit longer to get done, and they just unfortunately got stuck in line. As the money ran out, they were kind of out of luck at that point. But as far as I know, there's still money left at this point. They're still pushing to make sure that the money is given out to the businesses that need it. The first time around, the loans were averaged about $200,000 per loan. This time around, it's much lower than that, which means that the smaller businesses who really needed that money did get the money at this point. I have not heard many businesses that did not get the money when they applied for it, but for some of them, it took them a little bit longer because they didn't have the necessary paperwork readily available. They didn't have payroll records, they didn't have their financial statements, they didn't really know what number they were able to provide on a very confusing application. So it took them a little bit longer to get done, and they got it. And people are using the money, and then last Friday they changed the laws a little bit to extend it out to make it a little bit more favorable for some of those business owners.
Yep. And so, so let's kind of touch upon that a little bit. So you're right. So last week, some of the rules changed, but it's all also around this whole notion of forgiveness, right? So can you just touch upon sort of how that part works? In order to get forgiveness, what were the types of things that business owners need to spend the money on? And knowing that the rules just changed, can you just briefly touch upon sort of, as far as we know, right, the latest version, sort of how a business can get some forgiveness of the loan?
So the forgiveness was supposed to be, you were supposed to, the first draft of it, you were supposed to spend 75%, at least 75% of the money on payroll, 25% on rent and utilities and interest at that point. They changed those rules. They relaxed them back to say, hey, now you have to spend 60% of it on payroll, the other 40% on the rent and utilities and interest at that point. As well as you had to originally had to spend the money within 8 weeks. Now they've extended it to 24 weeks. The biggest reason for the extension was people, obviously the businesses weren't open, so they weren't paying their employees. And a lot of those employees were on unemployment and had a little tougher time getting off unemployment and wanted to stay there because they were making more on unemployment than they were through the business. So they had trouble attracting those employees back as well as just the business not being open. So, here in Massachusetts, as we've started to open up the economy again, they wanted to give more time to spend that money at that point. And by doing that, it allowed them to hire their employees, get everybody back to normal. And hopefully by the end of the year, they could spend that money, because that 8 weeks were tough for businesses that just opened within the past week or two. They weren't going to be able to spend that money, even if they got the loan back in mid-April at that point. The 8 weeks is coming up really quick. So the 24 weeks, because there is a what they call a full-time equivalent calculation to the forgiveness, they had to, if, for example, if they had 5 employees on the full-time side, when they went for forgiveness, they had to hire all those 5 or equivalent 5 people back. So people were having trouble with that number, which meant that you weren't going to get your loan forgiven as much as you wanted to. So they, kind of laxed the rules a little bit to help out those small business owners who just weren't able to hire the people back and spend the money as it was intended to be spent at that point.
Okay, okay. And speaking of forgiveness, so I know that this was something I saw in the news, and I'm sure it's caused a lot of confusion. I'm sure you're getting a ton of questions on this, but there was some news around sort of, if you have money paying for these expenses and then the loan is forgiven, you can't then deduct those expenses on for your taxes because which would otherwise be normal business expenses, right? So this then goes back to the whole notion of tracking and having your books in order and stuff because I would have to imagine that with this sort of rule, as if the IRS leaves it in place, this has got to be a nightmare if you don't track it properly.
Yeah, I mean, I've advised people to set up separate accounts for the money that they're spending as part of this, part of the loan that they receive, so that it is separate. I'm guessing the IRS, they're still busy closing out a 2019 tax season that got extended to the middle of July. So they're focused on that. I think what's going to happen is after the year closes for 2019, they'll focus on some of these things and hopefully make the changes because a lot of people don't have to submit these numbers until the end of this year, early next year. So they have some time to figure out that stuff. But in a nutshell, it kind of makes sense. If they're giving you a free loan, if you're able to get 100% forgiven, you shouldn't be able to take the tax break that goes along with it. So the thought was, kind of on par, but they need to make a couple of tweaks to it to make it just a little bit stronger and a little bit more, relevant to what's going on at the moment. And I think they'll eventually do that. Similar to the changes they just made last week on the PPP, it just takes the government a little bit longer to figure it out. They hear from all the different groups, and the people do their lobbying, and they eventually get it fixed to something that's a little bit more tangible for everybody to handle at the moment.
Right, right. And yeah, I mean, government, nothing moves quick in government, right? It's like turning a
Yep.
battleship. So there was also one other change that came out last week, and that was really related to the length of repayment for the loan, right? It used to be 2 years, and I believe now it's up to five, or it is five. Can you just
Yeah.
clarify a little bit on that as far as you know?
Yeah. So what they did was everyone had 2 years on the first pass to pay the loan back if weren't able to get it forgiven. You had a 6-month window before the payment started. So, for example, if you got the money in April, your first payment wasn't due until October. Hopefully by then it might get forgiven, so you don't have to worry about it. But they did extend that back because they made it 1% interest loan, which is very good these days to get an interest rate that low on a loan. They wanted to extend it to 5 years. However, there's a little caveat that they give you the 5 years, but you have to ask for the 5 years. So it's just not an automatic thing. Any new loan that gets processed after last Friday automatically gets the 5 years. Everybody else has to ask for it, which shouldn't be a big deal whatsoever. So you should check with whoever you did get the money with and just double check that to make sure that if you're not going to get it forgiven, you want to make sure you extend it from the 2 to 5 years. Again, as we talked about earlier, cash is king. You want to make sure that you're not making large payments over 2 years. You might as well extend it out over 5 years and truly get your business back to where it was before and on good footing. And then making those payments become a lot easier at that point.
Right. So, so that's interesting. That you bring up a great point there is and again, I don't necessarily get into this as much, but if you have to ask for the 5 years, so if you got the loan early and you ask for the 5 year repayment, if someone doesn't know that because they're not working with somebody like you or whatever, or they just didn't know to ask, they wouldn't know, right? Necessarily, right? And that makes a big difference.
Yeah, I mean, we live in a 24/7 society here with news and social media and everything, and I'm always surprised with the people that never hear anything about it, but they're not looking at the sources. It's not their role to do it. As we talked about earlier, the chef, he's good at making the meal and being in the kitchen. He's not going home and reading the Wall Street Journal and reading every little line about every single law that's being passed at this point. So, you just want to, again, this is where it goes having a good relationship with your banker. The banker should reach out and say, hey, you know what, I never heard from you. When you didn't extend it from the 2 to 5 years, I want to make sure that here's the paper, here's the paperwork, sign it, get it back to me, let's get everything done. So this is where those good relationships with people come into play, where they're going to look out for you at this point, and not try to leave you on an island by yourself and, you making your business fail because, you can't pay it back in the 2 years. The 5 years would have been, much favorable monthly payment at that point. So the
Right.
good relationships, working with the things, and just finding the right people to help you out in the whole situation because this thing is changing for accountants, and I follow a lot of accounting boards and things like this. Even accountants are confused by what's going on here because it's changing so frequently, and they want to make sure they understand it, and everyone's trying to find a little loophole or something different. And you want to make sure that you're giving clients the right advice. You want to make sure that they're put in the right position, and not coming back later on and blaming you for something that you might have told them and pointed them in the wrong direction.
Awesome, awesome. Okay, that pretty much wraps it up for us today. I want to say thank you to our special guest, Paul Falowitz of Cicentrix Business Advisors out of Billerica. Thank you to everybody who's been on the webinar Wednesday. Um, you will be getting an email within the next couple days with the link to the recording of this webinar. And so again, if you need to go back and replay it because you might have missed something, you can do that. We'll also be posting to my YouTube page within about a week or so. But also, stay tuned also because I do these every Wednesday on various financial topics. So as part of that email that I do send out, I do have a quick anonymous one question survey. It's one question just asking you, what other financial topics would you like to see, would you find useful? So I would appreciate if you take a moment to just fill that out. And again, it is anonymous. No names need to be attached. So thank you very much. And again, thanks to Paul for joining us this evening. Everybody stay safe and have a great night. Thank you.